The International Monetary Fund has just recently upped its forecast for global growth over the next couple of years. It's only a marginal increase, but it says that we'll see 6% growth this year and something like around about 4.4% in 2022. Doesn't sound like a lot, but in the context of the recent declines that we've seen, this is some sort of progress. But how do we trade this, and which sectors should we be following in order to get a steer on how best to follow up on this? Well, John Meyer joins us now from SP Angel, where he's a mining analyst and one of the founders of the business. John, welcome. We talk a lot about the mining industry. I want to get a first of all glimpse of what your thoughts are in terms of this big picture story that we've got coming through from the IMF. I know we've spoken before about the amount of money that China's pumping into their economy, and now we've got Joe Biden coming through with $1 trillion of promised spending. How do you summarize this for those that I say want to get into the markets and try and get a slice of this in terms of their trading opportunities?
Yeah, well, look, it's great to see the global economy recovering the way it is. In fact, recovering faster than had been expected. And yes, this is down to a lot of stimulus funding being pumped into economies, being pumped particularly into manufacturing. China was very quick to stimulate smaller companies and larger companies and spend a lot of money on infrastructure, create the confidence that companies would need in order to start planning for future growth. And of course, we've all watched China do this very successfully over the last 20, 25 years. Now the Americans are saying, well, we can do this too. And of course, everything in America always has to be bigger and better than everyone else. And why not? America badly needs new infrastructure. Roads and bridges are crumbling in many areas, partly because they're old, partly because nobody spent any money on them for ages. And I think it's become acceptable now to have higher debt to GDP ratios levels. The IMF has actually warned certain countries they should pull back. They warned China that they should pull back a bit on lending to riskier companies. And we've already seen them touch the brakes a little bit. But the fact is, there is this kind of arms race going on between American manufacturing industry and Chinese manufacturing, because nobody wants to get left behind. And it's really hard competing with China when they've got such low wages that they could, as an input cost. Wages around the rest of the world tend to be higher. So manufacturing industry has to stay ahead in terms of technology and the quality of the products it produces.
Interesting, isn't it, as well, looking at some of the political aspirations of Joe Biden, particularly because he came to the White House on a ticket of an environmentally friendly attitude towards the global economy. To what degree is this influencing what he does? And is China following, or does China go off on its own, in any event, in its own direction, using fossil fuels to drive industry and steer the economy into a more fossil fuel driven end result? Or do you think that the environmentally friendly steered policies will be seen in China as well as America?
I think it's worth pointing out that Biden's policies and Trump's policies towards China are very, very similar. But where they differ was that Trump was very happy for America to grow using fossil fuels, coal and oil. Biden was elected on a mandate a green mandate, a more environmentally friendly mandate to cut greenhouse emissions. And a large part of this is going to require investment into offshore wind farms, solar farms, much more other forms of green energy, hydrogen type fuel sources. So we're going to see much more investment or stimulus money steered towards electric vehicles, charging points, and of course connecting up these offshore wind farms that are now being planned. And that's a big thing. I mean, there's going to be huge investment in this area.
And then the next question is, of course, how do we, as those that invest in companies and metals, take advantage of this? You talk about the electrification. We've discussed this before, and I know you've got a range of metals I know that you follow in this regard. What do you see as the key areas to follow as a direct result of this expenditure, which has been given to us now around the globe from big government?
Well, there are a range of metals to invest in, and I think they're all going to be quite good investments going forwards, starting off with copper, which is clearly for all the cabling, for the charging points, and then cabling up the offshore wind farms. Then we go into nickel for the battery packs, cobalt, lithium, and we end up at the other end of the scale with the rare earths for the permanent magnets, because all this electrification works better using permanent magnets. Sure, you can actually you can create motors without permanent magnets, and some electric vehicle manufacturers do that. Tesla started off using a certain type of motor without permanent magnets, but guess what? It discovered that it would get better range, better efficiency out of its battery packs if it used permanent magnets in those motors. And these are quite consumptive from a rare earth perspective.
This is quite interesting, isn't it? Because this opens up the political angle to all this. Because China, from my view of things anyway, and my view is not as wide and as deep as yours, but my understanding is that China has control over the majority of many of the metals that you've mentioned, especially rare earths. How does this play into the political thing, the angle on this, especially with Joe Biden, who, as we've already established, wants to get a lead over China in some of what they're trying to do here?
Yes, and China really controls a lot of the processing of the rare earths. While you can mine these metals elsewhere in the world, they're almost all processed in China, particularly the neodymium and the praseodymium that go into these permanent magnets. And we are now seeing governments like the UK government investing in UK subsea resources, which is a private company. It's part of Lockheed Martin. And we think Lockheed Martin developed this technology back in the 70s as part of a CIA project when they were contracted to mine rare earth nodules off the seabed. But actually, in reality, what they were doing was recovering a Soviet submarine that had exploded and then sunk on and was lying on the seafloor. So they didn't tell the Soviets what they were doing at the time in the middle of the Cold War, but they developed the technology to recover that submarine. In fact, unfortunately, the sub broke in half while they were doing it, so they didn't get the whole sub back. But what they did get was good technology for mining nodules off the seafloor. I don't think this is going to be a panacea for the West, though.
Okay, so this is just one project that's underway and funded by partly by a private company. Do you see much opportunity for companies to invest in these new areas themselves? As I said, a lot of this money is being spent by governments. Government will award contracts to businesses. But are there opportunities for these small mining companies to get involved in digging more of this material out of the ground?
Oh yes, there certainly are. I mean, we're talking to companies that are looking to reprocess phosphate tailings, for example. Those are the tailings that are not the non-radioactive ones, to develop rare earth mines in Africa, for example. And then some of these companies are now looking at the processing of those rare earth concentrates on Teesside in the UK. So I think this is where the extra value is going to be gained, is actually in the processing of those materials into the battery metals, into the permanent magnet metals in the UK and in the USA as well.
How long is all this going to take? I mean, clearly this is a long-term project, and I mean Biden's at the beginning of a 4-year stint, and clearly his government is doubtless hoping that they're going to get a second tilt at this in 4 years' time. Whether we led by Joe Biden's another matter, but clearly this is a long-term project, and doubtless have long-term potential positive implications for those investing in these markets. Where do we go? Let's take this price of copper. You talk about the electrification. We've spoken before about 10,000 being a magical number. I know we've spoken over the last couple of years. This has been your target, and quite honestly, we're not too far away from that now. Is there still realistically much more upside to come for these metals from where they are at the moment, or have they done all this future market pricing? Are they now pricing in all that you're talking about in terms of opportunity?
Well, I think if we stand back and look at where we are in terms of the new super cycle and a new era of electrification, which I think is what we're really starting off in, I'd say we're only 25% into that right now. And I think we've got many more years of new demand to come through. The American stimulus is really not, it hasn't had much impact on American manufacturing yet. Sure, they've handed out stimulus to individuals to support the economy. Now the real stimulus in new infrastructure is being discussed and debated, and it will take a while. But this Biden stimulus package, the $2.3 trillion that Biden is looking to approve, is going to be spent over the next 15 years. So that's $150 billion every year for supporting US industry, for supporting new infrastructure and innovation. And I think this is actually going to create very substantial growth in the US. And what we know about the United States is when they start to consume commodities, they consume on a much bigger scale than the Chinese do.
And of course, we must remind ourselves that if the price of these metals does go up, it therefore means that these companies can then spend more in their exploration and new and innovative ways of getting, for example, copper out of the ground. We already know there's not enough copper around on the current mines that we know have been established. So clearly they've got to look for more prices. This is going to lead through to inflation. This then goes back to this point you mentioned about the fact that governments are quite happy to build up debt to try and fund these projects. Ultimately, it could come back, of course, to kick them up the backside and be a real problem if prices do rise. How do you see the end game here developing over the longer period?
Well, yes, I'm sure we are going to see some inflationary pressure here. I mean, there's going to be a triple whammy. You've got oil prices rising again. You've got lower utilization rates within manufacturers, partly because of logistical issues, partly because of social distancing in factories mean they're slightly less economic. They can't produce as much as they were before. I know in some cases losing staff hasn't been so terrible, but in reality, most of the people employed in these factories are well utilized, and so I think yes, the inflationary pressure will come through. Just starting off with the underlying commodity price, which is always a good excuse for raising prices at the top end, and at the same time, I think the Americans are trying to ramp up. They recognize they need to stay ahead of China Inc. Otherwise, we're all going to be having to kowtow a little bit to the Chinese, shall we say.
Look, John, it's an interesting subject. Thanks indeed for looking into the crystal ball for us. Clearly something which we should keep an eye on, and indeed the list of metals worth looking at. Thanks indeed for joining us. That's John Meyer from SP Angel. For more videos from us here at IGTV, join us on Twitter at IGCom and subscribe to our YouTube channel.